Hey, so my name's Jesse Gonzalez, and I'm coming back with another video about reverse mortgage. And this one is a little bit different. This one's going to be covering maybe some of the negatives or some perceived downsides to a reverse mortgage. And I'm going to cover a few of the high points. And I've talked to a lot of people about reverse mortgage, and we've done a lot of seminars about reverse mortgage. And so the common questions that people have about reverse and the common, I would say, misconceptions or concerns, it's kind of a set few, and we go through the same ones over and over again. So it's all part of the process. It's all good. While we're doing this video, hey, if you like what I'm saying and you want to hear more of what I'm saying, then I ask you to hit like. It lets other people know that maybe we have some content that's great for them to hear, and also hit subscribe, and you'll be updated anytime we do a new video. So like and subscribe, and we'll keep bringing you great content. So one of the probably top negatives that I get on reverse mortgage is people talk to friends, family, maybe a coworker, a realtor, and these are people that they trust. That's why they're asking them questions. So that's fine. But they say, hey, so my friend told me that if I do a reverse mortgage, the bank is going to own my home. Or I have to give ownership up in my home in order to do a reverse mortgage. And I would say that's common misconception number one. Now, the industry has done a very good job to dispel that rumor or that concern, because it's just not the case. Now, back when reverse mortgages originally began, that actually was the case. And that's where this whole comes from, right? And so people in my industry, in the reverse mortgage industry, almost every single one of these common misconceptions, we've done it to ourselves. We've made people think these things because a lot of them were true at a specific time. So the bank will not take ownership to your home. In fact, anyone on title has to be a borrower. So if you are 62 years of age, you qualify for an FHA reverse mortgage. If you have somebody on title that's not your spouse and they're 55 years of age, well, then that person actually has to come off of title. So you, the borrower, who is 62 years of age or better on an FHA reverse mortgage, remains on title if your property is held in a trust, a revocable living trust, and you are the trustee, you're the beneficiary, you have the ability to encumber the property. We don't even need to transfer ownership out of the trust and put it back in. It can remain in that trust the entire time. So common misconception number one, you lose ownership to the home. That's wrong. Another option or another item that people are concerned about with reverse mortgage, and this one actually is true, is that your loan balance is going to grow. I would say that probably what is not true. So here's the conversation that we have with folks is, hey, Jesse, if I do a reverse mortgage, I'm not going to have any equity in my home. The equity completely disappears. I'm going to use all of it up, and my heirs aren't going to get anything when I, pass away and when the home passes to my heirs. So there's a few things in that statement that we unpack. And this is not an objection overcoming or an objection handling video. These are just things that we hear and kind of some of the things that we talk to people about and address. So the fact is, yes, you will be adding, if you borrow money on a reverse mortgage, you're not making a payment on that reverse mortgage. So those interest charges are accruing. Mortgage insurance premiums are also accruing, and they're adding to the principal balance. And so your principal balance will grow and grow every single month, and it's going to get bigger. Now, hopefully, if you do one of these loans and you're 62 or 72, hopefully you live 40 years, right? Hopefully you maintain your life and you live in that property a very long time. And if that happens, yes, that equity that you had when you originally did the mortgage is going to be less over time. Now, there's a few things to consider. So if you run into a value adjustment period like we had in 2008, where a lot of people lost a lot of equity in their homes, if we run into that again, then yeah, for sure, you're going to lose a lot of equity. Not only to the home values adjusting, all right, but also because your loan balance is increasing. And so that's something to consider. Hey, do I want to use the equity in my home? And then it comes back to the question of, well, why are we doing the loan in the first place? Is this a thing where you need this loan in order to survive? Well, if that's the case, then I would strongly consider what benefit you are looking for, and does that outweigh any loan value or loan amount appreciation where you're chewing into the equity and you're leaving less money for your heirs. And listen, that's a family decision. That's a decision that you need to make, but that is definitely something to consider. Now, there is a protection set in place for FHA loans where your heirs or yourself can never owe more on the home than it's worth. Okay, so let's just take an example. Let's say you run the loan balance up to $500,000, and by the time you pass away, your home is worth $400,000. Well, if your heirs really want to keep that home in the family, they have the ability to do so, and they can do a refinance into their own name of that loan. And FHA, the mortgage insurance component that you've been adding to the principal balance every single month, says that your heirs can pay that loan off at 95% of the value of the property. So if it is worth $400,000 and you owe $500K, your heirs can refinance that loan, keep the home in the family, and do it at 95% of that $400,000 value. So that's something to consider. So yes, you're going to add to the principal balance every month. You're going to eat into the equity. But here's another thing to think about. So home values appreciate over time. Now, we've had crashes since they've been keeping records that date back to the, say, mid-60s, okay? And we've had 4 real estate crashes in that time. And the approximate average annual appreciation rate of homes in the United States, and it varies by region, of course, right? It's a local thing. But the annual average appreciation rate has been just at 6.5%, dating back to the late 1960s. And that includes 4 real estate crashes. So your loan balance is going to grow, but your home value is also going to grow. Now, hey, could you catch it on a time where maybe values dip and that's just the time that you pass away, or that's just the time that you need to move out of the home? Of course. So again, that's something that you should consider and work through those details with your reverse mortgage planner or with your financial planner or with your family to make sure that that's something that fits. The last common misconception or the last common concern that we get, the biggest one, is, hey, you know what? Like, what if I have to move into a nursing home facility? What if something happens to me and I can no longer occupy and maintain this home as my primary residence? When I want to, but maybe I'm no longer able to, or maybe I need to go convalesce in a nursing home for a period of time. Is that going to trigger this loan being repaid? And the answer to that question is, it depends. So the way that it's written right now is if you vacate that property for 1 year or longer, then the loan needs to be paid back. That's in the documents. Now, there are some laws, the return to home laws, where that could be debated, where if you are intending to return home, that's still your primary residence. But the reason why we talk to people about this up front is, hey, if you are healthy and you're not projecting in the next year or 2 years to be moving into a nursing home facility, then I would say that it's okay to consider the reverse mortgage. Now, if something happens 5-10 years down the line and it was unexpected, then that's something that your estate is going to have to plan for. But if you know about it up front, you can mitigate some of those risks, right? So maybe you make it a point to return home and have some in-home care for a period of time. So you break off that nursing home stay so that it's not a year. It's just a matter of planning appropriately, because if it's a year or longer and you come back in the 11th month and you're occupying that property for a week, now, does that reset the clock? I would say that you would have a good defense on that. So these are things to think about. Now, if you say, hey, I'm going to be in my home for a year, and then you know what, I have to get out and I have to go move into this nursing home facility, or hey, this is a 2-story home, my knees are getting bad, I don't think I can go up and down, I want to minimize and go to a single story, then you know what, reverse mortgage probably isn't for you on that home unless you absolutely have to use that money to survive. Then who cares about what's going to happen a year from now? It's something that you need now. But if you know that you're going to move I would say that it's probably not the best idea. Now, you can always sell your home and you can purchase a home with a reverse mortgage. So that's an option as well. So if you're going to downsize, don't think that you're pressured into a reverse mortgage now, like this is the only opportunity, because you can sell, you could take a portion of that equity, purchase a new home that's right-sized to you, and you can use a reverse mortgage to purchase that home. And now you don't have to purchase all cash. You can save some of those proceeds that you get from the sale of your home. So these are the common misconceptions or common concerns that we see and that I see when I talk to folks about reverse mortgage. So definitely something to consider about the con side, or maybe some of the things that you need to think about ahead of time. But when you're working with somebody like myself, you do the HUD approved counseling, you're going to be able to get these things answered. And if you're coming at it from a perspective of, hey, we want to help and we want to fit this in as part of our retirement plan, it's different than just somebody that's trying to sell you a reverse mortgage to make a commission. And that's our air conditioning in the building that's going on right there. So hit us up if you need anything. Leave me a comment. Hey, if you have a question about, hey, this is, I was worried about this, or I'm talking to somebody about a reverse mortgage and they're telling me this, leave a comment. I'll respond. Again, my name's Jesse Gonzalez with True Blue Lending. Like, subscribe, and we'll talk to you on the next video. Thanks for watching.